All right, so we had another week of earnings. There was no real mega big companies releasing this week, but there was still a decent amount that I wanted to talk about. As far as the market goes, we had a good week, right? The S&P closed up a little over 1% on the week. NASDAQ was up about 2.5%. I believe the NASDAQ and the S&P both made their highest weekly close since September, so it's been almost 2 months roughly. So it's looking like, again, the market, honestly, very surprised if it wouldn't be a choppy next 6 months or so. I think that they're waiting for one of two things, right? I mean, when do we get this recession that people have been talking about for over a year now? Probably comes, I would say, early to mid 2024. The big question there is that how bad is it going to be? Because if it's mild, honestly, the market might not even go down hardly at all, right? Because pretty well everybody is expecting this, right? And if it's not worse than expected, then it's very unlikely that we see a major correction. Now, again, for all we know, it could be major and we could see something completely unexpected, right? Nobody knows. But honestly, as far as the end of the year goes, I think we probably close fairly good, right? I think fairly good, barring anything crazy happening between now and then. But I think we probably close the year slightly bullish, and then we see another correction again at some point in 2024, depending on this recession that everybody's been talking about, right? Now again, the Fed more than likely is done raising rates. Now again, Powell was talking hawkish recently, although again, how many times have they talked hawkish and turns out they ended up doing something dovish, or vice versa? That's happened time and time and time again. So you really have to take what they say with a grain of salt, and you also have to take what they say and try and figure out what they really mean by what they say. So that's just what I read from things. The one really bullish thing that I think isn't being talked about enough right now is Bitcoin. Again, we're getting the next halving is going to be happening in April or May. More than likely, it's very, very certain that we're going to get these spot ETFs at some point in 2024, possibly sooner. That's going to be massively bullish, right? So I think that we're going to see a very, very good year for Bitcoin. There's also talk that that BlackRock is trying to get a spot Ethereum ETF. I don't know if that's actually confirmed yet, but the one thing that I would point out there is that if they're applying for spot Ethereum ETFs or even anything else in the crypto space, they wouldn't be doing that if it wasn't a done deal that they're going to get the Bitcoin one, right? Because they'd be just wasting their time, right? So again, very, very likely we get a spot ETF. It's just a matter of when. If it's not within the next few months, it's just a matter of when. And again, coinciding with the halving, coinciding with possible rate cutting cycle, I think that's going to be very, very bullish for Bitcoin, and this is why we've seen this draw up. But I think we're just getting started. Now again, we will see a correction. Again, that's how Bitcoin always works. Again, there's always going to be corrections to shake out the weak hands, right? So be careful for that. As far as the earnings go, the first company here is Instacart. That's not the right ticker here. It looks like they're not actually on here. Anyway, they did beat earnings and profits. So again, they released pretty good earnings. They're a company that I follow because they're fairly innovative, although they're still not at the point to where I would be buying them. They're still a heavy. They're leaning heavy on the growth side, which I think you certainly have to be more skeptical in a higher rate environment. The next one is NXPI. This is a company I do have a small position in. Missed revenue, although earnings were also down slightly. Again, this is a given, although I still think that this is a very good company. I'm still buying where it's at. The one thing you have to keep an eye on is evaluations, although again, a price of free cash flow of 20, again, that is slightly above the 5-year average. The PE is way below, the price of sales is below, so I'm still comfortable buying it where it's at. Again, a price to free cash flow of 20 for one of these chip making companies that's still growing decently. Profitability is very, very good. I'm still buying where it's at. And again, I'm not overly concerned. It's going to be cyclical. These chip companies are going to be very cyclical. But in the long run, I think they're all going to, not they're all going to do well. The good ones are going to do very well. The next one is Realty Income. Again, Realty Income's been beat really, really bad this year. How much are they down, just out of curiosity? They're down 22%, so they've been absolutely destroyed. Again, their dividend's up to over 6% where it's at right now. The FFO yield of 7.6. So again, they're going to be able to pay this dividend. The question is, are they going to be able to keep growing? Because over time, historically, they have grown very nicely, but recently they've been struggling quite a bit. They did beat earnings and revenue, right? So that's good news as far as Realty Income holders go. They were actually down slightly on the week, which is kind of confusing. The next one is D.R. Horton. This is a company that I do want to get a position in, although I'm waiting for them because they're basically right at their 52-week high. Again, a very, very good company. Again, this is one of the big home builders. But if you look at their valuation, price of free cash flow of 12, again, they are way below. The problem is that our current levels of earnings going to be sustainable. That's the one thing that concerns me. And that's why I'm looking to get them a little bit cheaper, even though they do appear to be cheap in a lot of ways. The next one is DAR. Earnings down, revenue up. This is a company that I've watched for a while. I've thought about digging into, although I never have. Interesting company, although again, I haven't bit, for lack of a better way of putting, because I think that there's just some better options out there. Devon Energy, again, they beat earnings rather easily. Again, they raised their dividend. A solid company, although I think that there's just better alternatives, which is why I've sold it. Again, I used to really like it. I think it's still decent, not that it's bad by any means. I think there's just better alternatives. The next one is EXR. This is a company I do have a position in. They're a self-storage REIT. They beat earnings and revenue rather easily, which is good to see because they've been beat down really hard recently. They were up a lot on the week, over 10% by the looks of it. But if you look at year to date, this company is still down. Let's see how much they're down here. They're down about, oh, come on. Actually, no, that's not the low. About 18%, which is, again, quite a bit more, a lot more than the market, right? And one of the main reasons, too, is weakness in the real estate area in general, even though self-storage has always done well. They did acquire LSI, which the market hit them pretty bad for. I think they'll still be okay in the long run. I mean, currently where they're at, again, 5% FFO yield, I think they'll be okay. They did cut the dividend by the looks of things, which, let's see here. Yeah, they did cut the dividend, which is pretty concerning, but again, over the long run, I think they'll be okay. That's just my opinion here, but again, I think they'll be okay in the long run. LCID, Lucid Motor, again, they missed earnings, lowered guidance. They got hit very, very hard on that news. Again, this is a company that I probably wouldn't touch with a 10-foot pole because, again, if you look at a lot of these companies, I mean, how much are they down from their all-time highs here? Just out of curiosity. They're down like over 90%. So again, 92% they're down from their all-time highs. So again, this is just an example of a company you don't want to touch with a 10-foot pole because they lose money and they're not even really all that good in any other way, shape, or form. Again, this is a stock driven by hype. A textbook example of a company you don't want to own. And again, if you look at the car industry, everyone's talking about electric vehicles, but what people don't talk about is selling cars, at least at the top, is not really all that profitable, right? I mean, look at GM, Ford. Again, they're not that profitable a company or companies, right? So again, these are examples of companies that I just would never touch. The next one is Occidental Petroleum. Again, income was way up. They had very good earnings, so that's good news for people who own this company. Again, obviously one of Buffett's gems. So good news there. Primerica is the next one. Again, another company that I've been dollar cost averaging for about a year now. Again, I really like this company. Easily beat earnings and revenue. Again, a very good company in my opinion. This is one of those companies that I think everybody should own in my opinion, right? Free cash flow yield of 9%, right? I mean, dividend yield of 1.2. They're going to keep growing that dividend very, very, very nicely. Again, they've grown that 21% a year. I think they're going to keep doing that. So The next one is Affirm. They beat revenue, although they missed earnings. Again, another company that I think is very interesting, but again, just not profitable, and that's why, again, I do not own. Again, look at how much is this company down again as well from its all-time high. You're looking at about 85%. So again, another example of a company you just want to avoid. And like I've said time and time again, companies that don't make money, 99.9% of the time, you do not even want to think about owning, right? Just my opinion there. But I think that's good advice. Digital Turbine is the next one. Again, they missed revenue. Again, kind of an interesting company, but again, another example here of a company that, again, they're losing money. You just don't want to touch, right? They're a textbook growth stock, again, down 95% from their all-time highs. Again, interesting idea, but again, just not making money. Again, company you want to avoid. The last one here is Wheaton Precious Metals. Again, one of the better gold mining stocks, at least in my opinion. Again, they've been chopping sideways. They're actually down over the last 3 years. So again, I've never actually took a position. If we got like a major bottom in gold, I might take a position, but again, just not good enough in my opinion. They did beat earnings and revenue, although that's because of higher gold prices. So again, a company that's clearly tied to gold prices. Again, I do like watching these companies because I think they're good to watch, but again, just not good enough in my opinion to take a position. So anyway, that is earnings as far as this week goes. Again, very interesting to see how the market plays as far as the end of the year goes. Again, we have less than 2 months left, which is crazy to think about. We'll already be into end of year earnings a couple months from now, which will be very interesting to see. So again, that's very exciting. Last thing I mentioned, again, if you like the video, please like, comment, subscribe, and stay tuned for more.